Hello everybody, this is James Stanley with Daily FX Education. Just wanted to do a quick sound check, so if you can hear my voice, please type in a Y. Please type in a Y if my voice is coming through. And as soon as we get confirmation on the audio-visual side, we will get this session started. Hey there, $1 Million Man. Good to see you, buddy. Hey, Cole. Yeah, no, this was on me. It took a little delay to get everything started this morning. Michael Boutros was on right before me, and so we have this little transition period, shall we say. But type in a Y if you can hear my voice. As soon as we get confirmation on the audio-visual side, we'll get this session started. Lots of good stuff to talk about today. Alright, getting some Y's in. There we go. Hey there, Jake. Good to see you. Mark in Indiana. Hey, Cole. Hope all's well. Hey there, JP. Alright, fantastic. Looks like we're good to go. Loud and clear. Just want to say thank you very, very much to everybody for joining us on this session of the Fingertrap trading strategy. Now, this is a little bit of a different Fingertrap session, considering that we have ECB announcement that had, well, I guess it's still kind of in process, from what I understand. Now, as we've been discussing this week, we had ECB this morning, where it was largely, or where some had thought that maybe the ECB was going to announce something. They did. They announced that they are going to be embarking on asset-backed purchases. But also kind of like we said, be careful, careful, careful in that euro, because it seems like a good portion of this may already be priced in, at the very least to a degree. And then, of course, the euro has rocketed. So with the Fingertrap strategy, it's a fairly simple technical setup. I'm going to walk you through that as I try to manage these positions here on the trading platform. Just give me 1 second to get this all set up. I'll explain the strategy, and then we'll go into the positions that I had layered in this morning. But there we go. When I got into the office this morning, notice how the 8-period hourly is above the 34-period hourly, so it was showing me a long position per the strategy. And kind of like I said yesterday, I don't want to buy the euro even with somebody else's money. So I did not take that setup. I did, however, take some short dollars here in the Kiwi, under the presumption that we may be looking at a reversal, and then furthermore, the support that it built in here while the strategy criteria was still satisfied. So I was able to get some short dollar positions, but I also wanted to jump on here on this euro theme to see if we might be able to get some extension. Now, if you're in Fingertrap on Tuesday, you remember when I was scalping in the euro yen, and I had this one right here that's right now about 81 pips to the good. So when I walked in the office this morning, I had this setting, I think it was about 100, 110 up, and after we had this rip on the euro, I looked at that as an entry. This satisfied the entry criteria on the strategy. And then I moved the net stop on the position to just slightly in break-even territory. Okay? So I essentially used the gain on this position that I had left over from Tuesday's Fingertrap webinar to roll into a bigger position going into ECB. In the event that if I could get some sell-off moving to the downside, I might really be able to take something home. Doesn't look like we're getting that follow-through, though. Pound yen, however, it seems to have been giving us some cooperation. Notice how the support coming in right down here at 175.25 appears to have thwarted the move lower, but I'm still in the profit about 7 pips to the good. So I'm going to attempt to manage these positions while we're going through the strategy and in the webinar. We are still in the middle of the news announcement because, from what I understand, the size and scope of this program was announced at like 9:30. Which was just like 11 minutes ago, so I think that we may still be getting some of this news filtering into the market. So for the strategy, it's fairly simple. I just use a few different moving averages here. That's it. Okay. This moving average is a 34-period moving average built on the hourly chart. Okay. That's the longest and slowest. Then I have an 8-period moving average also built on the hourly chart. And then I have an 8-period moving average that's built on the 5-minute chart. Once again, all fairly simple stuff. The goal with this strategy is to be able to take advantage of momentum, kind of like we had in the pound yen, right? Because when these things are just melting down or melting away, it can be really tough to get an entry, right? Like if we're looking at something like this on, say, like an hourly chart, right? This thing's just tearing away. There's no give back, no give back, no give back. And it can be challenging to actually get a position in the direction of the trend until it bottoms out, right? To the point where now we got to sit through this chop and wait to see if it might have another leg lower. So with this strategy, it allows me to go in a little bit tighter, take on some entries on a shorter term basis so that if we can get that continuation, fantastic. But if we don't, then I want to get out of here quick. Okay, so the central part of the strategy to me is stop and risk placement. You can kind of see on this pound yen entry that I got this morning. Okay, so we had the move lower. Okay. And when we crossed below the 8-period 5-minute EMA, I entered the position with a stop just above this level of resistance right in here. Okay. Now what I want to see is I want to see movement in my direction so that I can pull this stop down to break even and begin scaling out of the lot. Kind of the same thing here on the Kiwi, although this is to the long side. Okay. The 8 hourly is above the 34 hourly. I bought when it crossed the 5-minute 8-period EMA. I got my stop below these swings. Notice how this zone of support had come in. And this was the same setup that we had looked at yesterday, as this thing was just kind of ranging around for a while. So I got my stop in here underneath support to see if that dollar weakness may become a pervasive theme. And that's the strategy. All pretty simple type of stuff. Alright, so I'm going to watch these positions to see if I may be able to manage these. What I mean by may be able to manage is when I open the position and I set my stop at a swing or at a level, I try to do it at a level that I'm comfortable with so that I do not have to renegotiate with myself as to what I want to do if the trade isn't working out. Okay? I look at it like a fixed cost, if you will. When I open the position, I place my stop, and that's kind of like buying a ticket to a Broadway show or a baseball game, right? You're paying for an experience. That experience can be great, and you walk away feeling very confident or happy with the fact that you spent that money. Okay? So when I looked at this, when I was walking in this morning, I got this entry right here and placed my stop right here to adjust the net position into break-even territory. I felt confident with that. Because if we break above here on the euro, and if we take this level out, I don't really want to be hanging around in a short-term, short position anyways. Okay? Jay says, I've been setting stops too tight. Each person has their own, I guess you could say, like comfort level with risk amounts. Wider stops can give you a greater probability of being able to close out profitably, but it also means that you give up a lot more when you're wrong. So it's a happy medium. There's not, one way that's better than the other. Tight stops versus wide stops. Provided that risk reward is at the forefront of that discussion. Okay, that's the big deal in my opinion. Okay, so I'm 12 up here, which I'd like to get a little bit more because I went a little bit wide on this morning. Okay, but it looks like this resistance starting here at 175.48 is going to hold for me. So if I could get about another 5 to 10 pips, if I could get this back down to support, like I had just a little bit ago, I'm going to move this stop down to break even, and then I'm going to begin scaling this thing. But I want to see the support come in again. And it looks like Euro Yen starting to go into the good for me as well. See the zone of resistance here? Right, all these price action wicks. Now, if I was profitable in the trade, which I'm not right now, I would add another position as price crosses through the 8-period 5-minute EMA. Given that I have these wicks up here, right? Because it appears as though as we popped above 137.50, we've seen sellers. Right? We've seen some buying support too, so it's not a one-sided equation, right? But this is one of those areas where I may be able to look for that lower high. Let's go out here on a 4-hour. There you go. Right? It's kind of like we looked at yesterday. Like I told you, I want to see Euro pop up so that I could get it at a better level and feel a little more confident with a selling position. Now, it may keep going for a little while. That's personally what I believe the euro dollar may do. Although it's putting in a pretty gnarly inverted hammer here. The level I'd love on euro dollar would be 27.5. I just don't think we're gonna. I don't know if we're gonna get that this morning. So yeah, we got a full boat of risk here. Euro yen. So I did want to mention this. Why euro yen and not euro dollar? Well, it kind of goes to what I was saying a little earlier. When I walked into the office this morning and looked at euro dollar, we had this crossover last night, and it's continued to show higher highs and higher lows, right? Now this doesn't mean that it's a given that this thing is gonna continue moving higher, but it was enough for me to say, okay, well, there's a probability of a short squeeze here. Especially given that I was coming into this announcement expecting nothing. And we may have something to work with. Though. Maybe not now, but maybe a little later. That's something to work with. See, this old support comes in right around that 26 2/3 resistance, and this could shape up to be a pretty gnarly pin bar. But you just gotta wait for it to close before we can say that for sure. There we go. Euro yen's in the good. Might take a little while for this thing to wiggle out. And heck, I mean, if the story isn't done yet, I could still get a stop. But I like my chances. Trading is just probabilities, and the best that we can do is try to assimilate those probabilities at the outset and then manage it as such. React, right? Reactions can be dangerous, but we gotta kind of pre-program those. Cole asks, how low could pound yen go? Can you show me some support levels you can see? Yeah, we're at one right now. 175.25 is one that's kind of been thwarting us of late. So that's the first one that I'm looking at. And if we get down to 175, that's one of those big psychs that, kind of like I was talking about yesterday. It's one of those oh no levels that could elicit some interest here. Okay, so we're pretty close to that support. We're just like 4 pips off. So I'm gonna wiggle some down here. Move this stop into break even. Okay. So reason I'm gonna do this break even stop right now. Notice this little swing that we had right there at 175.50. Okay, it's also a lower swing high. So now, whilst I'm in the trade, if this thing pops back above that swing high, then I might see another swing high, and another swing high, and another swing high. So I want to protect off here to a degree, and I'm also going to remove a piece, small piece, small piece, just 5% of the lot. Droghi says U.S. dollar. That's kind of a fizzler for me this morning. Like it was showing me a pretty massive counter trend movement here. And the only thing that I really wanted to take this counter trend on was good old Kiwi. Kind of like I had outlined yesterday, or what I was beginning to try to set up yesterday. When I came in the office, I saw this, this nice little range that had developed since last night. A very decent support zone down here. So I liked my odds, and line that one up as such. So I'm in essence playing a breakout / range here with a trend strategy. All right, this is the one that I really want to watch. Pound yen I feel good about. Whenever I manage in multiple positions, I always want to isolate to my loser. All right, just to watch it, be a little more careful. This thing's dancing around here quite a bit. Kind of the same thing. I'm looking for a breakout here now, right? Guess says S&P magic dip. Did it bounce? I haven't seen it since the open. Ha, yep. Go figure. Little spooze bounce there. Watch this thing though. I mean, this thing is showing some pretty anemic signs right now. And then, you get kind of caught up in the media talking about how bad October traditionally is. I'm not a fan of those cyclical types of studies. Okay, so Euro Yen's moving against me, but it's okay. I still like this resistance. Now, I'd start to get maybe a little more trouble if we break above this resistance significantly, right? But I don't even really need to sweat it. I got my stop where I want it. If it hits my stop, NBD, right? No big deal. You manage winners in this game. Losers manage themselves. All right. See, that's why I wanted to take some off. Just in case. If you get one of these support levels, it's been, coming back quite a bit. You want to respect it. You have to respect it, or else it won't respect you. Alright, so I have the trades on. I'm going to let them fly. Now, if I could get a break on this pound yen, 175.25, I may look at adding a piece here. I may, because if we got a support level like a 175, and then, if we see support building up ahead of that, maybe this 175 level doesn't offer as much support as I'm anticipating that it might. It's just a theory, but it's a theory that I can work with. Alright, Kiwi dollar. It looks like this thing just wants to range around, but I made a comment yesterday and over Twitter that got quite a few retweets. Don't let a short-term trade become a long-term problem. I think there's another way of trying to kind of look at this. If you take short-term trades that you'd only be comfortable with on a long-term setting or scenario, it's kind of like threading a needle, right? It's kind of like looking through a keyhole that, if you look just right, you can see right into that room, right into the area of interest to get the information that you're looking for. And that's kind of what I try to do with this strategy with Fingertrap, because I'm using these hourly moving averages really to show me the directional flow that I want to be looking for. So it gets that longer term perspective in there. And then, I'm taking a shorter term trigger with shorter term risk management. So that's the way that I kind of try to do it. And of course, it doesn't work out all the time, but nothing does. This game is just about risk management and probabilities. Alright, I'm going to try to answer some questions while I'm managing these. So feel free to let me know anything that might be on your mind. I'm more than happy to help with whatever I might be able to. Now, I know I went over the strategy really quick today. So if you want a more robust explanation of the strategy, this article can definitely help you out. This is what I'd written as somewhat of the primer for the strategy. Alright, I'm going to take some questions whilst managing these positions. And I'm going to hope that this thing has some rock and roll in there for me. See, the 0 yen position I really like. I really like it. Even though it hasn't shown me what I want yet. But it's one of those where, I got my stop at a good level. Even if if at the end of this webinar, if I'm still not in the money, even if I'm up here, 170 or 137.75, I'm not going to get jumpy on it. I place my stop based on good science. A stop that I'd be comfortable with on the hourly, the 4-hour, the daily. I like my odds on this. So as long as we remain respected underneath these previous highs like 137.70, 138, well, my stop's here, just a little inside of that. And I should be able to remain inside of the position. All right, if we break higher, I don't want to hang out here anyways. I'll wait to get a short position at a higher price. So I'm good with where I'm at right now, even though this one isn't showing me what I want to see. Place your stops based on good science. You don't have to worry about that type of noise. Guest, how should trend lines be drawn, from close to close or from high to high, and vice versa? There's no one right way of doing it, and anybody tells you that there is a theorist, right? I think the answer to your question is be best expressed with another question. What is the value of technical analysis? To me, the value of technical analysis is in the potential for self-fulfilling prophecies, right? For the potential for one trader to see something and another trader to react, and then that creates a price movement, and that can get other traders involved, and other traders involved, and other traders involved. And before you know it, you have a group of market participants thinking in the same direction because of one synchronous move or action. I think that's what's really valuable. So thereby, the efficacy of a trend line is largely going to be based on a number of other factors as opposed to how perfectly it's drawn. Now, I'm going to be honest with you. If you just go for closes, you're not going to get that many great trend lines, right? Instead, I like to go for a combination of the two. I call it max touches. I don't know if this is a thing, but this is just always the way that I've been taught to do it. With max touches, what I want to get at least a couple of bottoms in there, right? Like a couple of exact candlestick bottoms. And let me show you what I'm talking about. So when I look at something like this, I see what could be, some level of uniformity, in the veracity of this move. And so what I'll do is I'll break out my line tool. I'll go to the low right in here, and I've snapped this, or I attempted to snap it to the low. Okay, go to high-low right here. It's going to snap it. So all I got to do is go to the candle that I want to start it on. Go right in there to the candle I want it to connect on. Okay, now I'm going to project it. In my opinion, you need 3 touches to make a trend line a trend line. Okay? And this is one that I would say I have 3 touches on, because I have the first 2 origination, and then right back here, that's where I get confirmation, because you see how these wicks came in? Right? It wasn't perfect, right, because the low penetrated it. But that shows me trader reaction, right? When prices broke below this trend line, some buyers jumped in, pushed price higher. So that's where I get the theory that maybe this trend line is something the traders are looking at. And we get another touch here, another touch here, another touch here. But see, if I had negated this whole thing just because we had a quick break right here, then I would have called this thing garbage. So it's a happy medium. It's more of an art than a science. But I personally look for what I call max touches. I want to find a good point of substantiation to get at least 3 touches to confirm the trend line. First to establish, the third confirms. Okay? And then thereafter, I just look for additional confirmation. Now, with that said, I'm not just going to buy on this thing blindly, right? Like, I'm not just going to buy this because we're at a trend line. As a matter of fact, it looks like we might be trying to break over this thing. But we got to wait on that. So, yeah, trend line's much more art than science, in my humble opinion. All right, going to do a little more bleeding here. I'm going to take off a little more. Whenever I get that churn, whenever I have that support knocking in down there, that's when I'm going to get a little more jumpy with my risk. Just a little bit. I'm going to bleed off the position, in case it bounces back. At least I've taken a little more profit off the table. Euro yen's the object of my desire right now. There we go. Looks like that trend line may actually be old support, new resistance type of phenomena. Right? Notice how we have these lower highs, that 5-minute chart. Looks like that flow's changing. Hey there, Howard. Doing fantastic, my friend. Thank you very much. From Guest. Hello from Cyprus. Has the webinar started? Yeah, that came in a little earlier. My bad on the lateness of getting this started. From a $1 Million Man, Euro-dollar reloaded for a short. You think? No, I think the euro is a little convoluted right now. I want to try to avoid that. I'm going to let that one settle down. Right now, my pony on euro is going to be against the yen, because the yen right now is just feeling a lot more strong than what we're seeing in the dollar. The dollar feels like we got a reversal story here. And maybe it's just tightening up ahead of Fed. I don't know, but or NFP. There we go. Looks like I might be getting that break after all. Okay, so now that we got new lows, I'm going to cover up a little more of the short position. And I'm going to bleed this thing down as we get new lows, right? Because we want to, when managing a position, we want to buy weakness to close shorts. We want to sell strength to close longs, okay? And then if I could get this thing moving in the right direction with enough of this position out, then I'll use the remainder of this position to load into a new one. Much in the same way that I had done on Euro Yen, just on a significantly shorter term basis. Okay? But I'm liking what I see so far. Money Emotion, or $1 Million Man says, loud and clear, do we not get to see your pretty face anymore? I think we're going to be bringing that back. I got to do some videos for a really big kind of promotion, I guess, that the firm's doing tomorrow. And so it's with great sadness that I'm going to have to shave off this beard that I've been working on for a couple of months. I don't even have Euro Pound enabled here. I'm not a big fan of trying to scalp that pair. Alright, you see how it's dancing? That's exactly what I wanted to take some out when we had that quick lurch. But we had a lower low, right? That's like that initial sign of anticipation via price action. From Gerald. Could you get your screen slightly clearer? It's blurred. Whenever I transmitted in HD, many folks were having issues with buffering. So it's kind of like trying to satisfy everybody, right? What I can say is that you may be able to upgrade the quality of the video. Let me log in real fast, and I'll show you where that's at. There we go. That's what I wanted. Yeah, you may be able to increase the quality of the video. Right, if you come down here and you click on this, right, you have these various settings. The highest it has is 486. So if you're at 46, then that's the then that should be the most clear that we have right now. Gert. Hi James, when trade of a 30-minute chart, what trend period would you use? Also, what pivots do you use on your charts, daily, weekly, or monthly? I don't trade on the 30 minutes, so I'm not going to give you some BS answer. That's what I wanted. Bleeding on the euro. I'm going to take this off pretty quick because it churned for so long, but I'm also going to adjust this stop down to right here. Right, I got this collection of swings. I'm going to protect up that profit. That's on the first position. This is on the first. That was on the second. There we go. I don't trade on a 30-minute chart, Gert, so any answer that I give you would be relatively disingenuous, and I'm not gonna make some stuff up on the fly. With Fingertrap, I use the hourly to help kind of grade the 5-minute, and the reason that I do that is because there's, just in my experience, a pretty good relationship between those two, where the 5-minute is going to show me just a significantly quicker version of that hourly. So yeah, I don't want to blow hot air out there. Pivots I use weekly and monthly. Dailies are rather interesting to me because they're not as big of an event when the R2 S2s get crossed. But the monthly and weekly are pretty valuable to me. All right, so net stop is adjusted heartily in the money. So this shows my net short position or my net short break even, considering the first entry that I had from Fingertrap last Tuesday and the second entry that I had via Fingertrap this morning. So my net break even is right here. Stop on both is right here. So I'm good and protected. Now it's time to hunt for some more. All right, getting some good bleed here on pound yen. Right, this is exactly what the strategy is designed for this quick momentum, right? And when I get this quick momentum, that's when I want to scale out. And then when it pops back up, that's when I can start to look at adding to the position, right? See if Kiwi's got anything for me. No, it's just kind of buttling back and forth. Looks like this is gonna. I mean, this may be something I take in NFP tomorrow. There we go. There we go. That's what I'm talking about. That's why I love doing this webinar, folks. I love getting to share this stuff with you. Most of the time I'm doing this by myself in a closed room, drinking cup after cup of coffee. It's a lot of fun, don't get me wrong, but it's even better to be able to kind of show off my toys, so to speak. See, as I'm getting this movement in my direction, I'm bleeding it, bleeding it, bleeding it, bleeding it. Okay? I want to try to strike a balance between being aggressive with my exit and conservative with keeping some of the position on so that I can get additional top side should that be available to me. There we go. More bleed, baby. More bleed. Boom. From Howard, James, can you explain the S&P bounce that you just mentioned earlier, please? Yeah, for sure. All right, so overnight it sold off. S&P bounce that I was referring to a little earlier was like, well, heck, it looks like it's been selling off to the open now. But yeah, this was the bounce that I was talking about right in there. And then we had that doji this morning. Right, that. So it looks like we're catching support right there in the 1940 zone. But, kind of like I said in the chat box a little earlier, I am not a buyer of this dip. It's a little too robust for my tastes. This feels a little different. Really feels a little different this time. It was before we'd get those dips, and I was fairly confident that it would continue. or at least confident in my chances of being able to get some continuation. Right now, it doesn't feel like that. The offer on this thing is heavy. I don't want to stand on the train or on the tracks when the train's coming through. From Ashish, SP may be bouncing back on good data from U.S. earlier, and also a few minutes back, USD ISM 637 versus 57.1. Yeah. I mean, one of those things where when the patient is in critical condition, any signs of life are welcomed, right? And that's not really the case with the U.S. economy. It's looking like it's in recovery mode, but we've had some pretty bad news around the world lately, and I think that's one of the reasons we've been seeing the SPOO sell-off. The thing in Hong Kong is a big deal, folks. I'm a $1 million man, James, not a scalper yet, but I still enjoy your webinars. LDHF, my friend. I greatly appreciate it. In actuality, what I'm doing here is really the same thing that I do on a longer-term basis. It's just a lot more active and considerably faster because I got to stick down here and manage these positions pretty quick, in case I catch a reversal. But this move has turned out very well for me. It's been a good morning so far. All right, Kiwi, not looking good. I'm actually tighten up the leash on this thing. See, I wanted to get below that 178.50 because that was a big level here on the key. But if I can't, or if this thing isn't going to show me what I want, then I'm going to go ahead and bail. Last thing I want to do is give up hard-earned profits in a position that I might have to take into tomorrow to get some run. $1 million man says, man, managing several scalps, hosting a live webinar, keeping calm. You're the man. Very impressed. I appreciate that, my friend. When I first started doing these, I don't think there was anybody that was trading accounts, especially live accounts, on webinars. And I mean, this was like I couldn't find it anywhere. I tried to do reconnaissance on what competitors were doing and stuff like that, and so I figured it'd be pretty cool if I can, if I could kind of build this into the repertoire. And I don't know if there's anybody else doing it now. I haven't really looked at competitors in a long time, but appreciate you recognizing that, my friend, and appreciate that comment. From Pete, you expect an additional USD weakness? I don't know. It's really tough to say. Longer term setups here, just look like it's kind of, a pullback type of deal, right? So I mean, likely I'm gonna keep on hedging this thing until we get a definitive direction, and then I'll probably still hedge it. But I like holding this Kiwi position for a couple of reasons. Mainly because I think that this is a good bottom feeding type of opportunity, which I'm not a huge fan on, but it's one of those things where the dollar's so rich right now that it's bound to give back a little bit. Unless we get something that's just going to continue to drive it. Okay, I may be able to get a new entry here in the next 10-15 if this thing will come back up, hit the 5 period or the 5-minute 8 period EMA. From Peter, just in general, other than piecing off a trade, what determines your final exit of a trade? Final exit, if it's possible, I want to turn the last piece of my scalp into a swing, right? And Euro Yen was pretty much best case scenario for me a couple days ago, right? I'd scalped it from here. I took a little off, managed my risk, had my stop at a good level, left it overnight, came in the office the next day, it was sitting here, felt pretty good about it. Got some more run, came in the office this morning, had it down here. So just, if I can, I'd like to get that last piece in there, somewhat of a swing position. And then, kind of like I was mentioning a little earlier, I want to ideally be able to line this thing up from the perspective of, like trying to kind of thread a needle, right? I'm going to place this one here, stop was up here, felt good about the level, felt good about the trade. And, if the situation works out right, then, I can essentially do my job and manage off some winners here. Now, once I'm in a position, I kind of got a rule where I only want to take another piece out at more profit, right? So this last one that I took out was at 46.9. I'm at 47.5. I'm going to take off another little nibble right here. Okay, and so the next exit I want to be at 48.4 pips in the money or more. All right. That's just kind of like a general guide. Taunt investor, hey James, do you select the currency pairs to watch? How do you filter them? I sometimes feel like I'm watching too many, therefore missing a lot of detail. I really only trade majors. With those, and the reason behind that is because with majors, I could roll that into a cross if I wanted to. Like if I'm seeing that the sterling is extremely weak and the euro is extremely strong, then I could throw that into like a euro pound long idea, and I could trade it synthetically. Personally, I'd rather, in most cases, just go short sterling against the dollar, long euro against the dollar, and then that way, if I could get some dollar run, that could help me out there. But yeah, it makes my life exponentially more simple because I don't need to keep up with like 30, 40 pairs and setups and stuff. So I try to keep it simple. Grand total, there's about 10 markets that I keep a really, really strong kind of, what I say, bead on. Major currency pairs, S&P, gold, and oil. It's kind of in my wheelhouse. That's what a lot of the big guys trade, like Paul Tudor Jones, George Soros. That's their kind of speciality, if you will, and it's kind of how I've tried to model my own approach over the years. Big market's really liquid. There's usually always two strong sides on both. Okay, I got that one at 49.1. I want to try to get one out of 50 plus. If it'll give it to me. Doesn't look like it's in the cards. From William, how do you put the 8 and 34 MAs on the 5-minute chart? I actually have an article that'll walk you through that, William. I called it Building a Better Indicator. And this will walk you through using this on the Trading Station desktop platform. But this functionality is not available on TS Web or mobile. It's only available on desktop. That's awesome. Robin says, jump short pound Aussie now at 200 plus pips. Thank you for Fingertrap. LDHF, Robin. That's awesome. Well done. I love it when my students do better than I do. I love it. That's the beautiful part about markets, folks. There's enough to go around. There's no reason for narcissism. That's an easy tell. You find somebody that's narcissistic, that's somebody that's probably not doing this legitimately or doing it at all. One of those guys that's a marketer or, maybe trying to mask their insecurities by making fun of or being negative about others. There's enough in this world to go around, folks. Which is I am more than happy to give you or to teach these types of strategies. So I want you to make it your own. I want you to do better than I do with it. That means that I've succeeded in my job of teaching. From Murph, any thoughts on the Euro Aussie? Would you play a resumption of downtrend, strong candle rejection of 44.35? Would you wait until 5-minute EMA crosses down below the 1-hour EMA? I don't, and just in my experience, I don't really trade many cross-synthetic pairs with Fingertrap. So, kind of like the answer that I gave a little bit earlier, I believe it was to Gert. Yeah. If I don't know something, I'm not gonna bamboozle you and pretend like I do. I don't know how well Fingertrap will work on a cross-synthetic pair because I mostly focus this on the majors. More preferably, I might go towards a Euro position and an Aussie position. But right now, I feel a little bit better about a Kiwi long than I do an Aussie long. Because Aussie, it's given some of that same support structure. Kiwi seems like that support's maybe a little better based. Even another test down there right now. But, I might do a hedge on something like that. Guess, could you show how to snap a line again, please? Yeah, definitely. Trying to find a good trend line. Let's see if I can find a good trend line here for you. Well, here, I'll just delete this one, redraw it. Okay, so you go over here, you go to add line, just put your mouse over it, and then you have snap the nearest freehand high-low and close. I go to high-low, right? And then I just put my crosshair over the bar that I want to start it from, move it to the crosshair that I wanted to draw it to, and then appropriate the line as proper. Extend end, boom, bingo, bango. Now the coolest part about this to me is if I get these 2 touches, then I could see what type of responses we've had in the past, right back in here. Fatih says, beard, beard, beard. At least show the beard from Twitter before letting it go, Doc. I think I might. I'm afraid that some of the more conservative folks that follow me might not be too interested in it. I try to keep it clean over Twitter. From Howard, James, is everyone at FXCM growing beards like the guys in Duck Dynasty or ZZ Top? I tried myself, but could only manage a Frank Zappa style mustache. That was Jamie. Jamie Setley had a pretty awesome mustache last year that he had going for a while, but we've been talking about bringing it back for No Shave November. But yeah, we got kind of a rash of that going on. Ilya's working on the beard. John's working on the beard. You guys need to work on Jeremy Wagner, getting the beard going. He's the most clean-shaven man that I know. He keeps it close, keeps it fresh pretty much every day. But yeah, we got a little bit of a trend going here. From Munho, what's your target on Euro Yen? As much as I could get my greedy little fingers on. 137 would be great for right now for taking a chunk of the position, moving stops a little bit deeper. But ideally, I'll be able to take this thing to downtown. If I could get down to like a 132 long term, that'd be great. But with scalps, I try not to limit my upside. Like I sell my losers and I try to milk my winners. So if this thing's going to show me a break of 137, then I'm going to want to try to stick around there for a little bit to see if I might be able to get a little bit more. Guest, thanks, was wondering why I can't HD with you. Old hardware, new software, you look good and sound good. I can read your charts and hear you. That is what I need, thanks. Guest, I really appreciate that. Thank you. Thank you very much. And I do apologize for the lack of the HD option. I had done that on a couple of sessions a few weeks back, and the overwhelming majority of folks in the room were telling me that they couldn't see or couldn't hear. And, and I just really hate giving people that experience because I know how I feel on a customer end when I see that type of stuff. I feel like if I go into a webinar and I can't even, hear and it's buffering constantly, I feel like these guys need to get their junk together. And that's the last thing that I want to be bringing to you, ladies and gentlemen. From Gert, thanks, James. Can you run through how to select the FX pairs and how you select the pair to trade on a daily basis, please? I'll be honest, it's a lot more art than science. Like I follow 10 markets. I look for which one is giving me a setup with my strategy, and I want to kind of like I said, try to thread the needle. And line something up that looks good from the same perspective on a longer term basis, shorter term basis, intermediate term basis, and that's pretty much it. There's not really a lot more that goes into it than that. I know my 10 markets fairly well, so I have a good idea where I want to go in the morning. But kind of like I was showing you guys yesterday, I was looking at the potential for a dollar yen resumption run, and kind of like my man Florida Pippin had noted earlier, this thing went on a pretty gnarly move in the overnight. So I came in this morning and I had to adapt. I had to start looking for yen strength, and then wouldn't you know it, that was my pony, where I was really able to hit it. Guest says, LOL, you cut your winners very early. Why not let it run? Well, first and foremost, everybody has their own way of hitting something, okay? Everybody has their own way of trading a strategy. Secondly, I'm in all of these still. I'm in all of them. The difference is I just didn't leave all my profit on the table at risk, right? So yeah, I took out 5% of the lot at 11 pips up, another 5%, another 5%, another 5%. I'm cool with that. I still have the position going. So to me, it's a balancing act, right? If you just leave all your profits on the table, especially when you're scalping, you're going to give up so much gain that it is likely going to have a dent in your long-term P&L. But every trader is a little different based on how aggressively you want to manage these things. But I'm cool with where I'm at. Appreciate the feedback, though. Howard says, thanks for the explanation on the SPX. Hey, my pleasure, Howard. LDHF. Guest says, why is Hong Kong protesting and how can it affect FX? I don't want to get too deep into the political ramifications of that, simply because, I respect everybody that I get to work with, and I know that there's, two sides to every coin. I don't want to hurt anybody's feelings or say anything wrong that might sound disingenuous. What's happening right now is the people, or many people in Hong Kong, are protesting, in essence, China taking a greater deal of control over the country. The people of Hong Kong want to be able to nominate the candidates for political positions, as opposed to Beijing appointing them through a committee. And so it's, in essence, maybe even looked at as like a flashpoint right now of the continued implementation of Chinese politics into Hong Kong. So it's a big deal. Now, as far as how it may affect FX, if there's another Tiananmen Square, you better believe much of the world is going to be on notice. And that's what the big worry is that what's going on in Hong Kong right now with these massive protests that are largely peaceful, that there's the fear that force may come in, and that could have a pretty big impact on global markets around the world. My expectation in that case would be dollar strength on a risk aversion type of run. A couple asking on the cable. I looked at this one quite a bit, like basically until my eyes went cross this morning, and there were a couple of setups that looked like it was okay. Like, I mean, just in retrospect, right before I went on, that short position looks like it would have been all right. Heck, that was some pretty good runs, 61.70 down to 61.13. So yeah, it looks like that would have been great. But I already had pound yen on, and kind of like I said a little earlier, I was really trepidatious about buying dollars or chasing this thing from here. So I didn't. From Ashish, what are a few minimum factors you personally look at before taking a position? Is it strong weak gap output? It's the same. It's the same type of thing that goes into that. I want to see individualized currency strength slash weakness, and I want to try to focus on those themes of marrying a really strong with a really weak. So naturally, one of the ways to do that is to take like the strongest pair on strong weak and the weakest pair and marry them together and look at a cross, right? I take it a step further, and I'll actually do my own cross with the U.S. dollar. So if I see, let's say, for instance, the sterling is the weakest, the Kiwi is the strongest, then I'll simply do a cable short, a Kiwi long. Look for a 1 to 2 on each, and essentially look to play that with a hedge. From Pete, roger that. From Guest, if the situation comes up on one of the trades you're working, show when you add. I always do. We've done, I think 4 of these webinars since we brought them back on the schedule, and I think there's only been a couple opportunities where the strategy criteria was remet. That Euro-Yen position that I placed last week, I believe, was one of them. Or last Tuesday. From Guest, you've got lots of green arrows signifying your closes. Mine vanished. Is there an option to keep them on there? Absolutely. Right-click on the chart, show trading information, and right there, show trading history. And then show open positions in case other folks aren't able to see it at all. From Guest, where do you enter with this strategy? What's your trigger? I went through that in the earlier portion of the webinar, so I don't want to bore everybody else by walking through it again, but this article explains it way better than I'd be able to here in a couple of minutes. But in essence, I'm playing just with 3 moving averages. If the hourly 8's below the hourly 34, I look short side. Short side, I want to see price going against the 8-period moving average. Right now, it's going up, right? So this is when it gets in the process of reloading, all right? And I have enough of this position scaled out that I may be able to look for some continuation. But you guys know what level we just hit? Boom, 175, the level that I told you about. Now, just because it's supported doesn't mean that it has to hold, but this is the troubling part. To get my cross, it's giving me higher highs. It's on a 1-minute chart, but I want to watch this thing. I want to see where it actually resists at. If it resists right here, there may be something there for me to work with. If it bubbles up here to 175 and a quarter, maybe something there for me to work with. The May is going to be determined by the way the price action sets in here. If I get wicks coming through here, then that shows me the sellers are maybe looking at this as an advantageous type of move. If I don't get wicks, if it keeps driving, or if it closes at tops, then I got to chill out. But yeah, on this webinar, I basically run the strategy just the way that I run it, even when I'm not on a webinar. So if a reload comes up, I'll take a reload. But I need more than just a cross. I need price action to confirm that, right? That we may actually be seeing sellers coming in. Now, that may happen up here. It may happen right here. But gotta wait. When I have profit on the table, I'm usually going to be cautious with re-entries in a heavy news market. This thing can get jumpy very fast. Howard says, almost didn't recognize John Kickladder from his new picture, James. Yeah, me too. He's out in San Fran, so we don't get face to face, but maybe a couple times a year. But yeah, that beard changes the look, right? From Murph, no prob, thanks. Just curious what you consider synthetic cross. By the way, the Red Sox won the World Series growing their beards. They shaved this year, and we're in the cellar. Yeah, that's actually where I get this from, the beard growing thing. I played baseball in high school and then going into college, just my freshman year, and I didn't stick to it. I just wasn't good enough. Got to know your calling in this life. For me, I think this is pretty much it. Which is a good thing, because I can do this when I'm old. Can't play baseball when I'm old. I may have it. I may have that re-entry. I'm just going to keep watching this thing. All right, buyers came in off that. So it's not a bearish market yet. I'm going to keep watching. From Jake, would you reload Kiwi here? Nah, if I'm upside down, I'm not going to take another piece. That's my general rule. I'm not going to add anything unless I have a gain. As a matter of fact, this one is breaking support. I'm out. And see, so to answer your earlier question, guess, that is why I want to bleed these things off when I get the direction that I want. Right? Because when I take a straight run or a straight one against me, I mean, it's going to be a loss in the whole lot. So if I take a loss on a whole lot, and if I'm not milking this thing while I'm getting run, well, then I'm not able to make up for that loss. Right? The key with scalping to me is taking profit off the table when possible. All right. Another entry. Okay, I got my 175 and a quarter right in there. I'm going to get it just a little bit above that. I'll move this bad boy down here. Gonna look for the crush. Yeah, no, I picked pound yen there because all factors equal. I'm getting way better run on pound yen than I'm getting in euro yen. Right, so if I gotta buy some more yen, I want to do it on the market that's been showing me the most promise. From Fatih, Jamie with mustache. I haven't seen that, but the orange jacket is a living legend. Actually, was talking with Jamie the other day about breaking this one back out, and here he goes, Jamie Setley with the orange jacket, which I believe we will be seeing this come back in the not too distant. But if I can get him to do mustache with orange jacket, that's when we're really talking. From Bean, is it 5% you scale? That depends. Big move, I'm going to take out more. Wiggle, I'm gonna take out less. But each one of these is going to be a little different based on the move that I put in. From Howard, James, when you're F-trapping during U.S. hours, you have a cutoff time for entering trades. For example, no trades after 12 noon EST when one closes because liquidity is run up. I generally try to keep it in the overlap, but I'm okay with taking something after. The big thing to me, Howard, or anybody else, is risk reward. If I could feel pretty good about my stop level, then I'm gonna take it. Because to me it's a numbers game, it's a probabilities game. If I could look for a trend continuation with a relatively tight stop and the possibility or prospect of making 3 or 4 times the amount that I have to put up the risk, then I'm gonna take it. That was the reason that I really like this one. Because I already have a position in here. It put in this. Okay, this is what I'm going to adjust that stop down. Okay, now there's a reason I'm going to do this stop adjustment, and I didn't really incorporate this when doing this initially. So when I added this position, because I'd already scaled out of so much of this one, the net break even on both lots is really very close to my entry. It's right here, right? But also notice it's right above that swing. If I go to the ask, right, notice it's right there at the swing. So what I'm going to do is I'm going to adjust these a little bit tighter so that if this second entry doesn't work out, I just want to go ahead and get out of here pretty quick. Right, I don't want to go that deep. Go right here. 175.25. There we go. So if this thing doesn't play in the way that I want, I'm going to book out of here pretty quick. But I got that 175.25. That was the level that I was kind of showing you guys. I was going to give it a little more wiggle, but this is a fast market. I'll never move stops against me, only for me. Okay, when I set that initial stop, I do it based on good science. I'll only allow myself to tighten it up. If I go the other direction, I call that throwing good money after bad, and I think that is a scalper's remorse. I think that's one of the worst things that a scalper can do. Okay, so fact remains, I still have this position on. 50.7 was my last scale out. If I can get 50.8 or more, I'm going to take off another piece. And I'm going to let this one run and try to work this one next. And Jay, thanks James. Enjoyed this session. Hey, I enjoyed it too, man. Thank you for your time. Got 50.9, 51. Time to bleed, time to bleed. There we go, 51.7. Okay, now that I have 2 positions on and my risk is a little tighter, I'm going to get a little more aggressive with my exits. And so here's another reason that I'm pretty quick on exiting out, because if I'm going to hit a move, I'm in essence going to be able to take, or my goal here is to try to take 70 pips out of a 50 pip move, right? Because when it retraces, all of this lot that I closed out down here, I simply resell it at a higher price. In that effort of using the news. Okay, I need to get 53.2 or more on this next scale out, or else I'm not in business. Boom, got it. From Guest, Strong Week is a good app. Main thing is getting in the right way. Yeah, what I'll do is I'll adapt that analysis to my Fingertrap strategy or any of the other strategies that I'm working with. So the Strong Week analysis is kind of like an initial filter that shows me kind of the direction that I want to go. From Guest, where does cable come from? That's a really good story. So the first transatlantic cable that was laid on the Atlantic Ocean, or the floor of the Atlantic Ocean, to transmit information between the United Kingdom and the United States was largely used for transmitting currency prices or currency quotes between the British pound and the US dollar. And so it got the name cable due to that initial transatlantic cable that was laid to communicate between the UK and the US, and that name is just stuck. And they tried to do the same thing with the euro by calling it the fiber, but that was just a really corny name that did not stick. From Pete, love that target answer as much as I could get my hands on. Let's see the detail on adding to the position one more time, reloading. Yeah, so it's a qualitative type of thing, right? But like once I have a profit in a position and I got my stop to break even plus, and I usually feel pretty good about where the trend's moving, the direction of the position, etc. So that is when I want to start looking to add. And then the criteria is this would have been, this would have qualified the criteria or satisfied the criteria. Price crossed the 8-period EMA, got a wick right off of it. right? But I took that in pound yen instead of euro yen, and I don't know why. I don't know why, but this is where we're getting better run out this morning, and I'm much less interested in the whys than the whats. As a trader, it's my job to care about the whats. The whys are superfluous and after the fact, always. From Rudy. Hey James, very grateful for your passion about sharing. Trading can sometimes feel vain when practicing solitude. You know, there's an X factor to it too. You know, the more narcissistic one becomes about trading, the more that it seeps into their results. I know, because I've been there. You know, I was one of those guys at 20 years old that thought I was a master of the universe just because I turned a little bit of money into a decent amount in a short amount of time. It was only after I lost it that I realized that you know, I was really just a lucky guy. That I was too stupid to have noticed it right up front. Now I do not take my luck or my my fortune for granted. Everything is a gift. Every day is a gift. Rajiv, do you wait for a fresh entry if major news is coming up? Depends. Depends on the news. Depends on the announcement. I'm not scared of taking a trade in the news though. From Howard James, although the setup on Euro Yen M5 chart was not a textbook JSF trap setup, there were a lot of wicks, so would you have risked it for a biscuit going short on the pin bar at 950 EST? At 950, I don't know. You know, because it was, I think you're talking about that one that reloaded over there. We said 950. That one. Well, I already had one in that was upside down, you know, so I'm never going to add to a loser. I'm only going to add to winners. Right? Like if I'm going to get another pound yen piece, then I need to see this position go into profit, and I'd ideally like to begin scaling this one so that I get some of that risk out of the market with a stop to break even before before I'm able to do anything there. See, the key is to not sweat too much on this type of stuff. Like, if it breaks above this high, okay, maybe sweat a little bit, you know, but for right now, we just got a lower low, you know, so I still like my odds of continuation. Right, all we're seeing from here is some support coming in off 175. That's to be kind of figured. You know, the key is how much selling may continue here, and if we're going to be able to actually break through those buyers at 175. Cole says, great job, James. I have green arrows like you now, too. Well, man, put them out there on Twitter. Hashtag that as chart art. Tag me, and I'll be happy to retweet it, man. That's awesome. Hey, definitely my pleasure, Howard. Definitely my pleasure. Hey, it's definitely my pleasure, P-Dub. Certainly guessed. Absolutely, Pete. Ton investor, what size your portfolio do you trade? It's different across strategies. I trade significantly less on scalps, especially scalps on the air, than I do on swings. But it's a smaller portion. Less than 1% on these. Way less than 1% on these. But even less than 1% on the swing stuff most of the time. From Fatih James, have you tried Danian NetStation? News that FXCM accounts now may log in there. Any useful features does it have additionally? I don't know. You know, I'll be honest. I kind of, you know, made my move over to FX 5-6 years ago, and you know, when I did that, I was, you know, all about looking at new platforms, new ways of doing things, stuff like that. But you know, I kind of built in my repertoire the way that I want it, the tools that I use, and I haven't really gone outside of that a great deal since then. So not to say I wouldn't be interested in adding another platform, but the only thing I've really added in the last couple of years has been NinjaTrader. You know, because it's a better way for me to make algorithms. But I don't know. Wish I had a better answer for you. Pivot says, chart art. It's my favorite art. Awesome, man. Awesome. I like it. I like it. All right, so I got to take the last question of the day because I went completely over my time, and I need to go manage some risk here. But let's check out that Euro Yen, see if I can embark on any actions here. Okay, so Euro Yen is putting in a higher high. Here, it looks like this yen might be seeing somewhat of a little bit of a counter trend movement. It's a 1 minute chart, but let's go down to the 5 minutes, see how choppy that looks. Yeah, still like my odds as long as we stay below this 137.50 level. But I'm going to let these run, see how much I can get my my greedy little fingers on today. But, folks, I just want to say thank you so much for your time. We are going to be back next week. Got Fingertrap on Tuesday, got Fingertrap on Thursday. And hopefully we have some good volatility to play with. This week has been kind of a blessing on the vol front, so hope we can see this continuing. But if you want to talk to me in the meantime, if you want to see the articles that I publish or get updated as webinars are taking place, feel free to follow me on Twitter. More than happy to help. Also, if you want to be notified as new articles are made available or are printed, you can join my distribution list with this link right here. I am going to have a couple of pretty exciting announcements coming out in the next couple of days. I got one coming out later on this afternoon that has to deal with the big change that I was referring to earlier. But, folks, I want to say thank you so much for your time. Have a fantastic rest of the day. And as always, happy trading, ladies and gentlemen.